You think you're doing everything right by saving your money? But I'm here to tell you your responsible savings habit is actually a trap. Welcome to Billionaire Capital. In this explainer, we're going to show you exactly how to turn those static savings into an absolute passive income machine. We're talking no day trading, no risky crypto bets, just pure, foolproof math. Let's get right into it. Okay, think about this. 0.5%. That's the pathetic interest rate you're probably getting in an average savings account right now. Let's say you scrape together $10,000 and just park it there, doing the quote-unquote responsible thing. After an entire year of intense discipline, skipping out on things you want, doing everything right, you make a grand total of $50. I mean, $50? It's brutal. Looking at those numbers, you really got to stop and ask yourself, wait a second, am I doing this entirely wrong? So that brings us to Section 1, the Great Savings Trap, and exactly why just saving your cash is never going to be enough.
Look, here's the uncomfortable truth about your savings. They are strictly a defensive move. Sure, they protect your money, which is obviously important, but they do absolutely nothing to grow it. Most folks spend their entire lives just playing defense, right? They never make that mental switch to playing offense. And honestly, if you look online for advice on how to play offense, you're usually hit with two extreme, frankly terrible options. On one side, you've got the get-rich-quick crypto bros screaming about the next big coin, and on the exact opposite side, you've got the starve for 40 years crowd telling you to basically eat plain rice in the dark and never enjoy a single day of your life. Neither of these actually work for building real sustainable wealth.
So what's the actual secret here? Well, it turns out the biggest wealth gap in the world isn't actually between people who save and people who spend. The real divide, the one that matters, is between people who merely save and people who actively invest. That is a massive paradigm shift. See, if you're just saving, your money is literally sitting idle while inflation just eats away at its value. To cross that wealth gap, we have to understand the mechanics of putting your money to work for you.
Which leads us nicely into Section 2, saving versus investing and the mathematical reality of true wealth.
Let's do the math together, because this is where it gets crazy. If you save $300 a month for 5 years, you end up with $18,000, which, hey, that's a great accomplishment. But let's be totally honest, it's not exactly life-changing, right? Now, watch what happens when we just change where that money goes. Let's extend the timeline to 25 years and invest it at an average stock market return of about 8%. That exact same $300 a month explodes into roughly $285,000. Think about that monumental difference. That right there is the sheer unstoppable power of compounding interest working for you.
All right, so how do we actually do it? That's Section 3, the Index Fund secret, or basically the smartest way to invest.
I know what you're thinking. When most beginners hear the word investing, their brains just scream, risk! They immediately picture picking individual, highly volatile stocks, betting everything on one company, and then, panic selling on a random Tuesday when the market inevitably takes a dip. But listen to me, that is not investing. That's just lottery behavior. Building true wealth is systematic, it's calm, and honestly, it's incredibly boring. Just ask legendary investor Warren Buffett. He's said time and time again that the absolutely smartest approach for most people is just a low-cost index fund or an ETF. He uses his immense track record to validate this boring but effective strategy over that crazy lottery-style stock picking every single time.
So, just as a quick refresher, what exactly is an index fund? Well, instead of trying to guess which single company is going to win, you're essentially buying a tiny little piece of hundreds of the top companies all at exactly the same time. Think of it like this. Imagine one single glowing dot representing one individual stock. If you drop it, it easily shatters, right? But an index fund is like hundreds of glowing dots locked together into a solid, unbreakable grid. It instantly shatters the risk of dumping all your money into one volatile company because you get instant diversification.
Let's jump back to our earlier math for a second, just to really hammer home the absolute magic of compounding. Out of that $285,000 total we looked at, almost $195,000 of that is pure investment growth. Think about that. You only contributed $90,000 out of your own pocket over those years. The rest, the massive chunk of it, happened because your money literally went to work, earning more money for you completely on autopilot while you slept. Now for the fun part, Section 4, the 3-step wealth system. This is your actual blueprint.
Okay, here's the exact framework we're talking about. Step 1, the emergency fund. Step 2, buy the market. Step 3, automate. These 3 simple steps, that's it. That's the entire machine. See, it's not about being some Wall Street financial genius. It's just about setting up a structured machine that quietly runs in the background of your life. So let's break each of these down really quickly so you can start executing them today.
First up, step 1, the safety bucket. Now, you probably already know you need a real emergency fund, 3 to 6 months of living expenses sitting completely safe in cash. But here is exactly why it's absolutely crucial for this specific system. The number one reason beginners panic sell their investments is simply because life happens. Your car breaks down, your roof springs a leak, some random medical bill pops up. An emergency fund keeps your cash safe specifically to protect your investments from those life emergencies. You're basically building a protective wall around your portfolio so you never, ever have to touch your compounding machine.
Next up is step 2, buy the market. This is where you actually open up a brokerage account and just pick one broad index fund. A total market fund or an S&P 500 fund is perfect. Please, whatever you do, do not overcomplicate this part. You do not need 12 different complex overlapping funds. By picking just one broad index fund, you are quite literally buying a slice of the entire economy. And as the overall economy inevitably grows over time, your personal wealth is going to grow right alongside it.
And finally, step 3, which is honestly the ultimate secret weapon, automate everything. Look, human willpower runs out. It just does. Systems, on the other hand, do not. You need to set up automatic transfers that happen right after payday. Whether it's $50, $100, whatever your specific number is, it just needs to move automatically. Not when you feel like it, and definitely not when you happen to remember to log into your app. By automating it, you're guaranteeing that a solid system beats raw motivation every single time. Because eventually, on some random Tuesday, your willpower will fail. But your automated system, it won't.
This brings us to our final section, Section 5, Building Your Financial Future Through Consistent Small Choices.
I want you to think about saving money kind of like storing seeds in a glass jar. You're protecting them, right? You're keeping them safe from the wind and the rain, but absolutely nothing is ever going to grow inside that jar. Investing, on the other hand, is taking those exact same seeds out of the jar and actually planting them in the soil. Sure, it requires a little bit of patience, and yeah, you're going to have to weather a few storms along the way, but over time those seeds grow into a massive orchard that will literally feed you for the rest of your life.
Look, 5 years from now is going to arrive whether you prepare for it or not. The only real question is, what is your financial life going to look like when it finally gets here? Are you still going to be wondering where all your hard-earned money went, or are you going to be sitting pretty, having built a passive income machine that quietly makes you wealthy in the background? So I want to leave you with this final, really vital question to think about. Are you currently in the saving stage or the investing stage? Think about that carefully. Thanks so much for watching this Billionaire Capital Explainer. Trust me, your future self is going to thank you for taking action today.